Alireza. I'm a German-based lawyer, typically I would say. You're going to see on the slides, I'm using more graphics than text, so a little bit different. I have in my view, the 5 biggest misconceptions under MiCAR I want to share with you, also share with you some of my practical experience which I've gained over the past 11 years in the crypto business. Starting with the first one, as you can see here, also a nice picture again of Frankfurt, the European symbol, but you can always find some Easter egg with Bitcoin in it, so keep eyes open. We have used crypto assets regulation, so what I'm trying to say here is that MiCAR was the first regulation covering crypto assets. So this is a misconception, because if you see on the next slide, you will see that the regulation of crypto assets started way earlier. And without looking really at the slide, hopefully you can say which one was the first regulator, which one was the first country covering the regulation of crypto assets. Yes. No, it was not Liechtenstein. Liechtenstein is the TVTP, the token container model, became much later. So you see it on the slide actually, it was the German regulator BaFin, which published in December 2013. The document is still online. So in December 2013, BaFin was giving out a warning not to invest in Bitcoin. At that time, Bitcoin was roughly 10 euro. So BaFin, of course, was right about that. Later, they tried to push the people to invest in Wirecard. So let's see how this is like crypto-wise. I would say this is actually crypto-wise if someone is telling you something like that. But yeah, it's BaFin. So I'm from Germany, so don't take me wrong, I'm not against regulation. I'm doing my money with helping crypto players to get regulated, but I, for instance, also told 1inch not to enter the German market, even though the founders of 1inch in Germany. I told them to go to Dubai, which was before everyone went to Dubai. It was probably a better idea. But in 2014, I also started doing crypto advice with PLC at that time, and became also the so-called lead of PLC for crypto topics until 2018, and then I moved over to Simmons & Simmons, and I helped Coinbase getting the first crypto custody and exchange license in Germany. And then, with this timeline, basically also gives a little overview of how my career developed. I had my own law firm, and for 5 years, and then now with Deloitte Legal Germany, leading the Blockchain DLT practice. And as you see on the slides, you can see that MiCAR came back in 2019, 2020, when me and some of the colleagues who were around here, who were with the INAPA, which is the Blockchain Association of the European Commission, have to draft the first draft of MiCAR. And if you look at the first draft of MiCAR, you can see that it was really heavily pushed against Facebook and steering the project. So even if you talk to some people offline, like European Commission and others, they will tell you, yes, that's right. The first draft was pushed so quickly out to stop Facebook. Initially, or in the end of the day, they were also successful with that. Maybe not only because of the law, but probably because also the US authorities convinced them to come back to US and to wait for the Genius Act, which is now out, and helping US companies doing some crypto business. So the misconception, as you can see here, is that MiCAR was the first regulation. It's wrong. It was the German regulator coming out with that a little bit afterwards in February 2014. The FATF, the Financial Action Task Force, came out with its recommendations. Lots of recommendations, lots of documentation. And everything what the FATF is actually bringing out becomes a someday law. So I put it back in the days, and I was quite right about it. You want to know what's happening next, just look what the FATF is recommending to do, and they will do it. Yeah? If it's wrong or right, I think we can discuss that. I'm not always with the FATF, but it's coming law in the end again. So everything goes back to the FATF. Another law thing which you should have on your radar is what's happening in the end. So 2025 and now onwards, banks or credit institutions are asked to pay any crypto holdings with 1,250% of Tier 1 capital. This is very crucial. You're going to see on the next slide when I come to the next misconceptions. So let's go further to the next one. It's either crypto assets or financial instruments. So one of the differentiators you can find inside the MiCAR text is that you either have a crypto asset and it's regulated under MiCAR, or you have a MiFID financial instrument. This is not true. As you have seen already with e-money and the famous no action letter of EBA, MiCAR is actually quite mixed up with lots of other regulations. And the opposite regulation would be MiFID, so normally you say either MiCAR or it's MiFID, but that's not true. As you can see in the background, it's the project where we're involved and supporting, and it's publicly knowledge, so it's nothing confidential here. You can see it's a Stocker. So you can see the Stocker platform, and Stocker, Stocker group, Stocker, hands up. 1, 2, 3. So not many of you are into the Bitcoin ecosystem, no? So Stocker is like one of the investment platforms built on the Bitcoin blockchain, which is great in my eyes, and it brings together ventures who raise money, capital, so they issue security token, which is by definition of an instrument, and they bring together investors, mostly crypto native investors, those who made their money in the early days in crypto and have crypto in the wallet. They don't invest, they don't offer it to fiat and they pay. They take their Bitcoin or they take their stables and invest it. So this activity, it's MiCAR, right? It's economy, yeah? It's MiCAR, so providing crypto transfer service and providing custody of the investor's asset. But looking at the security token of the ventures, that's not MiCAR, because it's not a MiCAR instrument. But still, both businesses are combined on one platform, and it's quite interesting because we just heard from Delphine, how is it with market reviews? So how is it here with market reviews? Is there really market reviews happening? Not really, because they take the cryptocurrencies like Bitcoin and stable for payment, so there is no trading, so there is no market reviews. But for the MiFID side, there could be market reviews. We must know that this kind of security token you can trade on Bitfinex, which is one of the biggest security token trading. I hope you all know that. If I say too much, raise your hand and ask. And then you have market reviews. So the question is, the Stocker needs to apply the market review regulation of MiCAR or the market review regulation of MiFID. They're not MiFID them, they're MiCAR them. So this is how it really gets mixed up. And according to the EBA no action, I hope you know that one, the EBA no action basically said if you provide a custody or transfer service for stablecoins, you need most likely also an e-money license, which is ridiculous. So in this context, Stocker would most likely need to watch out for MiCAR, have an eye on MiFID, and maybe apply for an e-money license. It is ridiculous. It's not what the regulators started to do. It's not with any other financial instrument. We don't have it in any other. We don't have a payment instrument, we don't have a MiFID financial instrument. You either have a license under MiFID, or you have a license under e-money regulation, or you have a license under the new MiCAR regimes. Now with MiCAR, you basically are all over the place. Yeah? So that was the second one. Then we come to the third one. Stablecoins are new and rare. This I also heard about. It's also many banks now come and say, let's do stablecoin. Here's the overview. I hope it's still up to date. I think it was last week or the week before. Of the e-money token issuer. Some of you are wondering, okay, stablecoin is e-money token and SRF token. There is no SRF token. There is no SRF token issuer. There was Vienna who passed in Germany, and BaFin basically named them on a BaFin webpage and destroyed the life. This was the first and last SRF token issuer application, and even after this happened, the European Commission said this was not an SRF token with e-money. So BaFin didn't even get it right to say this SRF token with e-money. Anyway, here you see the e-money token issuers in Europe, those which have a license as an EMI and those who have a white paper. There are much more coming. And I don't believe they will all survive. So why? Because if you issue e-money token, you should know that you cannot pay out yield. So your customer is not getting any interest, not getting any yield. So none of the e-money token issuers could tell me how they take money into this business case. How they do profits. You're also not allowed to take any fees for the transfer of payment e-money token. So how they do profits is usually, let's say, do it as Tether or Circle, they do it outside of Europe. So Circle has a so-called 2 tiers level. So they have a Euro Circle and they have a Dollar Circle. With the Dollar Circle, they make the profits. Why? Because in the US, there are some ways on how you can generate profit. You can't do that in Europe. So even though I like all Unity in Germany, I like all the other players in Europe, they're all nice, Fantos is nice in the Netherlands, they're all nice guys, but I don't really understand how they make money, how they're going to do profit, yeah? how this is going to work. We can make it two nice money market funds, and we can call it $1 or €1 as Tim Franklin is doing it, Franklin Templeton is doing it, or Seacos is doing it in France, and it's limited for them, the tokenized money market fund. But with the same look and feel as in stablecoin, it's much easier. You just need a fund and a prospectus. You don't need any license. You don't have to compile MiCAR. You can see also here, like the elephant in the room is the biggest stablecoin issuer, the biggest player in the market. They don't have a MiCAR license. They're not going to get a MiCAR license. They basically move to El Salvador because they say they don't need to do business in Europe. They don't need it. And if you understand a little bit about stablecoin transactions, you will understand that no one can compete with Tether, because if you do a transaction which is more than €1 million, there's no market maker and liquidity provider in the market who will provide the stablecoins you need for the transaction. So you can't find like 50,000 European retailers who are for giving their 50 circle USDC to do a €1 million transaction. You need a market maker, you need a liquidity provider who provides liquidity. And they don't do it for free, so how do they earn money? You can't get any yield from the European settlement. So that's why, in my view, Tether will stay for the next years, and in 5 years we're going to see 5, maybe 6 major stablecoin issuers, and they're not going to be all in Europe. Most of them will be in the US. So what is the fifth one? Okay, MiCAR only covers crypto exchanges. I think it's the fourth one. I think it's going to become a fifth one, it's a fourth one. So MiCAR only covers crypto exchanges. This is something which I also hear a lot. You apply for MiCAR license, you have to become a crypto exchange. It's not really true. What you can see here, this is the list of the different cats. So these are the ones who have a license. I'm not sure if it's 100% up to date. Maybe this week or a couple of days ago, some more were added to this list. But what you can see here, we have a lot of cats who have now a license. Yeah, many of them. So we have a few of them. Yeah. And then you look at this one, and then you see which kind of business it is. Okay? And you can see that the highest number of licenses that go on the left, which is providing custody, that's a big business. And then totally on the right, there is providing transfer service. Yeah? Transfer service was actually missing in the presentation of the speaker at the beginning, because we did the same exercise for 1 inch if you provide a DeFi service. And transfer service is very interesting because it's very broad, it's very catch-up or clause, which is really getting all the potential services you provide. You did this one. Yeah, it was a nice one. It was a nice one to do the same exercise for 1 inch. I was for some time the head of strategy and policy for 1 inch, and we did this exercise and we discussed it with the regulators, and we did the same service as you did, but we also looked into crypto transfer, and crypto transfer is very interesting because it's catch all, and providing just QR code for someone to connect the wallet and get a peer-to-peer transaction could be transfer service. Who knows? Yeah? And you only got out of that because one is not taking any fees. There was this famous report of IBM promontory. They got paid by IBA, and IBA before got this project from ESMA to provide an overview about DeFi, and the report of IBM promontory is rubbish. It's really terrible. Like 170 pages which someone put together with ChatGPT, and it basically has in the end some nice metrics saying how much fees they take and how they're regulated. It's the end, this IBM report said that they're all regulated because they all provide some services and they all take fees. And if you go on the first page of 1 inch, you see you don't pay any fees for 1 inch. 1 inch is not taking any fees. So they never did. So I don't know how IBM is doing such reports and how even ESMA then stipulates such reports as true. Yeah? So anyway, you can see, no, it's not only crypto exchanges we have, it's really left and right a lot, and a lot is happening. And this is the last one, this is the fifth one, so sorry for that. The one of the was fourth. MiCAR will consolidate the market. So MiCAR will consolidate the market. This I've heard a lot from banks. So banks say in the end, we didn't miss out anything on crypto because now MiCAR allows us to do crypto business. As you know, banks or regulated institutions that do notification, they get license without applying for a new license, they will do notification in 40 or 50 working days. and then they get a license. So the idea is we didn't miss out on crypto because now we banks come in and then we do the business. That's not really true. As you can see from this example, and this example fits to 80% of the cases, and if you really start with cryptocurrency trading itself, this is an example of FATF Euro. FATF is one of the biggest brokers in Europe, also a bank, we regulated bank. You can see that, and it's also not again confidential, it's all open source information. I know that quite well because I helped them doing the business. You can see here that FATF is acting as a broker. They're not executing the orders, they're routing the orders. They're routing the orders to market maker. The market maker in this picture is Travias, which is a German market maker. And Travias then is turning around by trading or someone else. But let's say it goes to Travias, and then we have a crypto custodian, which is Tengi in this case, and Tengi, by the way, is the biggest European B2B2C crypto custody service provider, doing it for many banks, asset managers, institutions, as the custodian. In my view, these two things can never be done by a proper bank. Custody and market making. Market making can't be done because of this 1,250% rule. If you put Bitcoin or any other crypto, even stablecoins, which doesn't have any fluctuation, if you put it in a balance sheet as a bank, you must back it with 1,200% tier 1 capital. So if you have 1 million euro of Bitcoin, you must have 12.5 million euro or any other tier 1 capital booked there. So this is why a bank will never become a market maker. You will always need to have a market maker, which is not a fully regulated bank. You will always need to have a custodian if you really want to provide custody service, if you don't do self-hosted services. And the custody cannot be done by a bank because of technical reasons. They don't have the technical understanding, they don't have the technical knowledge. They will for the next couple of years use these kind of service providers as technical. Yeah? They will focus on brokerage activities and the market makers that don't want to interact directly with the end user because of AML reasons. For that purpose, you do KYC sharing only with the custodian. This is a simple plain vanilla structure how you can really quickly set up your crypto exchange service. And you can do it anywhere. Bitcoin is doing the same with first-time buyer methods, so also there. Only bigger exchanges like Panda, Binance, eToro, Coinbase, Kraken, they do it slightly different. They try to do everything out of one hand, but they are not banks. Typical, original crypto chains. So, with this said, I'm done. I hopefully made it in 15 minutes. And if you have any questions, you can just ping me on LinkedIn or wherever, or just later stop by and have a chat. Thank you.
Thank you, Alireza. I'm grateful to hear that you brought up Tangerine as an example. It's a company we invested in. We participated in the 1 round, and we are very happy to see that this is also one of the examples of the custody solution here. Moving on to the next presenter, I would like to bring in that secretary.